Stocks have fallen, business confidence rises, and economists are predicting a long road to recovery. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I've got my morning stein of coffee, and I thought we'd have a look at this article from news.com.au that's discussing, well, the falls to local stocks and business confidence still negative. Now, before we go through this article, I'll bring up the chart here showing business confidence and conditions, because while it is, well, mostly negative, it's gone up. It's positive. From the big hit it took in February this year, it has now climbed above the zero line. Now, with these type of these charts, business confidence and conditions, what they do is it's a survey. It's a survey, and if you're in the positive, they're more, well, there's more confidence out there. There are more people who are optimistic. If you're in the negative, there are more people who are, doomers, worried, less optimistic, no more negative Nancy's. And we've gone through a period where there's been a sharp increase in negative Nancy's with regard to business confidence. But now it's slowly creeping up. Business confidence is returning. And what we'll do is we'll just jump over here. We'll jump over here and have a look at this. This is from the Trading Economics. And this is a great website if you're not familiar just with economic data for all the political and economic nerds. The National Australia Bank's Index of Business Confidence picked up to 1 to 1. Still not very good, but it is positive in June from -20 in May as the country began to emerge from the lockdowns. Now, this is the problem. We're probably entering them again right now. So we'll have to see what the next month data is. Remember, there's always a lag with this data. There's surveys, there's people, contacted. It's not instantaneous. It's not like tracking your meatball sub getting delivered by Uber Eats. There's a delay in the information. And one thing, we'll scroll down here and we'll see. We'll see. So one thing that's quite interesting is looking at the difference between the forecast and the consensus and the actual result. So you can see here there was a forecast back in March. It was -15 and it dropped to -66. Then they've said, oh, it's going to get much worse from Trading Economics. So it'll be -75. But they actually beat the forecast. So it was still negative. It was still negative Nancy's at -46. But it was better than expected. So often you'll find with shares and things like this, the market will price in the forecast, and the difference between the expectation or the forecast and reality, that's the opportunity to make a profit or a loss. Then you see in May, it was forecast at 38, it beat that. And still, in June, they were expecting -15, and it was 1. So they're expecting in July it to be 3, and we'll have to see. Now, I've been doing the rounds. I've been ringing up different consultants just because I'm sourcing some quotes for a project. And all of them are happy to put fees in. Some of them are busy now. Pipeline's a bit quiet. They need to get more work in. I was talking to one gentleman who was hoping the government here in Queensland would start spending. But the worry is, once we enter into caretaker mode, election mode, that's all going to dry up. Spending all stops. Once that happens, best time to be a public servant. You can't do anything. Can't do anything. So we'll have to keep an eye on that. Well, I was talking to another friend. He's actually looking in the trade. He's doing well. He's busy. And I think it's just because he's gone on the keto diet. So he's lost weight. He's full of energy. But that's just the hidden secrets. But no, he's busy and he's looking at taking people on again. Which is fantastic news. When you're talking to a mate, it's good to hear. So I can see how business conditions are creeping up for some businesses. There's, in my small circle, there's talk of taking people on. There's other people that are, that have got decent enough work to keep them going. Sure, it's a bit patchy, but it could be a lot worse. So we'll have to see, but see, the problem is that can all change, particularly in Queensland if you're in the construction game and you're getting a lot of government work and that gets switched off, or we get more economic restrictions. We'll have to see. So let's jump over here and just look at a little bit here, some of the key messages from the NAB monthly business survey. So both business conditions and confidence continue to rebound in June, though it is important to note they are still weak in level terms. Well, yes, we'll bring up this. You can see the dashed line there. That's the average. That's the trend. So yeah, we're not doing too well. Well, it's understandable that business confidence and conditions are still quite low. Still quite low. You know, maybe there's a ray of hope, but will that be dashed now? Will that be dashed? Business confidence turned positive after rebounding sharply from record lows over the past 3 months. Conditions again increased, driven by significant improvements across the trading, profitability, and employment subcomponents, and a broad-based improvement across industries. Nonetheless, while the rebound has been significant, conditions remain deeply negative and well below average, reflecting the fact that activity still has some way to go before a full recovery can be declared. Some way to go. And unsurprisingly, the service sector continues to show the weakest outcomes, but of some concern are construction and manufacturing, which also remain weak, pointing to second-round impacts on industries that are not directly impacted by lockdowns. Pointing to second-round impacts on industries that are not directly impacted by lockdowns. Because there's the thing, you know, retail slammed, tourism slammed, construction. How many of you have been locked down, not able to go to site, not able to work? You know, let us know in the comments, guys. Any of the tradies, you still go to work. We're working for clients that are, you know, modular manufacturers. They've implemented systems and strategies in place which make a lot of sense. They were telling me all about it. You know, having rolling teams to divide it up so they can keep people working, minimize their risk. Working outdoors, a lot less risk as well. So what this is saying is the impact to other parts of the economy is flowing through to us in the construction sector. That's what happens. That's what happens, guys. That's how an impact on a macroeconomic level from international trade can just flow all the way through. It can flow all the way through. Notably, retail has risen to be close to the top in the pack in terms of conditions, a significant turnaround from persistently weak outcomes prior to the current pandemic. While there have been a very large and fast rebound in the business survey over the past 2 months, the survey points to ongoing weakness in the sector, which need to see ongoing support until activity levels and capacity utilization return to normal. This will be a key precursor before business can again consider expansion in capex and employment. There you go. So I will link to this in the pinned comments, guys, if you want to go through this yourself. You can see all the things here. And there you go. There's business confidence. It's gone to 1 in June. Conditions at -7 from -24. Trading is at -7 from -19. So everything's still negative pretty much. Pretty much. But it's getting better. But that can all change on a dime. And we'll see that next month. We'll have to keep an eye on that. Because just, well, the restrictions that are being reintroduced everywhere, that's gonna dash your confidence. And here's the question: will another round of lockdowns, another round of restrictions, will that plunge this even further than the first time? Or, and this is what I'll put to you, or we become more bitter, twisted, and cynical that, you know, it's going to take more to dash our business confidence. You know, maybe we just, you know, it's part of life. We'll deal with it. We'll have to see. So I'll have a shot of my coffee and then we'll go through this article. The Australian share market has slid as business confidence remains broadly negative. There's a long road to recovery ahead, according to experts. And if we jump over here to trading economics, let's have a look at the ASX 200, and we can see, okay, it's 59.41. So she got over 6,000, and it just tends to be quite unexciting and hovering around here. So, you know, where's the next move? Is it going to plunge down? Is the fact that, you know, some of these investments may not make you any money, is that going to be factored in? We'll have to see. And completely off topic, have you been following gold and silver, everyone? You know, I know a lot of people have invested in some gold and invested in some silver who are following the channel as a way to mitigate the potential risk of, you know, QE and money printer go brr all around the world. So there you go. I mean, it's exciting to watch. It can shoot right back down again. You know, if you're having the market falls, people are going to need their money. Let us know in the comments, guys. Let us know. That's the thing. You know, with gold and silver, I consider them a very long-term investment. You know, it's what we using, buying the kids silver coins as a way to teach them how to save, to actually hold something in their hands. Hold something in their hands. The Australian share market has slipped after recent gains coinciding with economic sentiment indicators signaling a long road to recovery for the Australian economy. The benchmark S&P ASX 200 fell 36 points or 0.6% to 59.41, with losses fueled by strong declines in technology stocks. Or is it pronounced stonks? The broader All Ordinaries Index shed 44 points or 0.7 to 60.45, while the Australian dollar at the end of the session was up 0.16% to 69.50 US. Subdued performance across the share market on Tuesday coincided with economic research by NAB, indicating business conditions and confidence were starting to improve but still remain broadly negative. We can see that they're a touch in the positive, guys. It's a touch in the positive. It's climbed above. It's climbed above the negative Nancy line. Will it stay there? Let me know in the comments. What do you reckon? We'll look at this next month. Do you think it'll still be positive? Or will it plunge again? Will it plunge again? NAB's monthly survey showed business conditions for June had risen 17 points to an index position of -7 points. NAB chief economist Alan Oster said the rebound in sentiment could be tested by the reintroduction of lockdowns in Victoria, which were implemented after the bank's survey was conducted. And there you go, that's what I'm saying. This data, there's a lag. There's always a lag in this economic data. It's actually quite worrying how long it takes some of this data to come out. And it's good to see the ABS and are using data from the ATO, they're using data from payroll to get more up-to-date information so people can make decisions. So the interventionists in the economy can make decisions, at least with newer data. You know, I'd argue for a less interventionist approach, and attempting to manage an emergent system as complex as an economy can have unintended consequences that our modeling may not even be able to anticipate. But perhaps that's a little bit too much of an idealistic view. I still advocate for it because, well, frankly, we need people advocating for that. So there's people around the table discussing it. People even thinking about that for once. You know, we need to counter all the people who want, you know, who want so much intervention they don't even want to take responsibility for their own lives. While the turnaround has possibly occurred faster than expected, things have certainly not fully recovered, Mr. Oster said. Australian tech darling Afterpay sustained one of the largest daily falls, sliding 7.2% to $66.55 per share, only eclipsed by the healthcare group Mesoblast, which fell 7.5% to $3.20 a share. How many people bought Afterpay in the ICO and just sat on it? Oh, sorry, the IPO. The ICO. Too much crypto. Too much crypto. Debt collectors, Credit Corp, extended the largest upswing, rising 6.7% to $16.29 a share. Well, what does that tell you? People are thinking if debt collectors are going up. Debt collectors are going up. All major banks ended the session down, with the country's largest retail bank, the Combank, posting a 0.5% fall to $71 a share. Westpac to 17, ANZ 1.2 down to 18, NAB closed the day down 0.4 to 18. Australia's major miners made some ground, with Rio Tinto share price rising 1.4% to $101, while BHP rose 0.1% to $37.08. Fortescue Metals also rose 0.1% to $15.51 per share at the close, while Newcrest Mining sharply fell 2.5% to $32.5. Gaming group Aristocrat rose 2.5% to $25.9 per share. So, Star Group suffered 2.3 due to their, well, the issues that are happening in the casino. Wesfarmers fell 0.15 to $45.98, while Woolworths ended the session down at 0.21 down to $38.40. I still remember Woolies, I think when it came out at like $3 back when I was a child. I mean, there you go. So it's interesting. It's interesting. The market is, well, putting more towards debt collectors and gambling. What does that tell us? Afterpay's taking a bit of a hit. And some expectations of a long road to recovery. Because, well, as we were looking here, business conditions generally still pretty negative. And this is before the most recent wave of economic restrictions. So what do you think, guys? How is business going for you at the moment? You okay? You busy? Is that pipeline getting a bit quiet? Yeah. You're hoping for more work to come on. We'll have to see. I think next month is going to be the real indicator. If we plunge back down in business confidence and business conditions, well, there we go. I've got another article saying that there's a few other ones coming up on the construction boom in Victoria, and then another one going, we haven't really felt the impact. We're going to have much broader lockdowns. So it's all a bit unknown, all a bit up in the air. Let me know your thoughts and opinions in the comments below, everyone. Please like, share, and subscribe. If you're a fan of the channel and want to help support us, there are a few ways you can. You can just interact with the channel. It helps the YouTube algorithm know you're enjoying the content and helps the channel grow. You can support us financially by joining us on YouTube or Patreon, using any of our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can find them all below. Use or buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Thanks, everyone. I'll see you in the next video.